We're still getting earnings this week across a swathe of industry. Let's get more from a veteran Wall Street and Bay Street analyst. He's just started his own firm. We're joined by Brian Belski, CEO and Chief Investment Officer at Humilis Investment Strategies. Great to see you.
Good morning, Canada. It's great to be back. Thanks for having us.
So how long were you at BMO?
13 years, 7 months, 3 weeks, 4 days, 12 hours, 32 minutes. It was amazing. So I've been doing this, believe it or not, it's my 36th year, so wow. 35 and a half years. And BMO was my longest stay, and it was an amazing time. I have great friends, great relationships. You know, this business is all about relationships. Mm-hmm. And, you know, me being a Minnesota kid and working in New York for so long, when BMO came calling all those years ago, I thought it was a perfect fit for me from a cultural perspective in terms of trying to build up the capital markets and U.S. presence for BMO and being, you know, in New York for so long, but also having the Minnesota presence and the culture. It was perfect. And so I love my time at BMO. I still love everybody at BMO. And we've had a great run. It's been an amazing relationship.
What's the Minnesota connection there, though?
Well, I was born and raised in Minnesota. So if you think about Minnesota as kind of, you know, talk about all this stuff this year about the 51st state. Well, you know, Minnesota is really should be a province of Canada.
I've heard that said, yeah.
So we grew up very similarly. The cultures are very similar. We kind of talk similar, but so that's why it's been an amazing run.
And just tell us quickly, what will Humilis do? What's your shop going to do?
So my job at BMO for so many years was really 3 jobs. Institutional strategy for the U.S., institutional strategy for Canada. Mm-hmm. Institutional clients, Andrew, are very different than private wealth clients. And we had the very good fortune of running portfolios. We've run portfolios, real live money portfolios, for well over 20 years. And so we brought those core competencies to BMO with us, our process, our discipline, and all that kind of stuff. And we were able to build a nice portfolio advisory business inside the BMO infrastructure. We're going to provide many of the same, similar type, not exactly the same, but similar type of portfolios with respect to Canadian and U.S. stocks.
So the S&P 500 around 6,850 today. You see it getting to 7,000 by the end of the year?
We do. And when we wrote our year ahead piece, which we've written 26 of them in our career, we said a year ago, Andrew, that the bull case for the S&P 500 would be 7,000. And so we're at 7,000 for our official year-end target right now. The markets are rarely linear for long. We're heading into this period where a lot of people are kind of playing catch-up, Andrew, quite frankly, with trying to be bullish on the market. Mm-hmm. Our call has been pretty steadfast and robust with respect to what we've been saying now since 2009, 2010. That the U.S. stock market's in a 25-year secular bull market. And oh, by the way, Canada's coming along for the ride, and it has during certain periods. 2025 has been an amazing example of that, of Canada. Canada actually, on an absolute basis, has outperformed the S&P 500. So we do think that it's time for a pause. We've talked a lot about that recently, that we're going to see a bit of a pause in the market, and that's okay. The more people that come out, quite frankly, and saying that they're shorting AI stocks and shorting tech stocks after this big run and trying to make the big call in terms of that. Remember, short sellers are very short term, and they can flip opinions pretty quickly because of how they trade and what their discipline and process is. So just be leery of making these big calls in terms of selling these amazing, gigantic, great companies.
I'm sorry there, I gave a value for the S&P 500 as of yesterday, and of course it is down a little bit from there.
Right.
Brian, just maybe we can just show a couple of charts for the uranium stocks, for gold stocks, and tech as a copper proxy. We've seen such a run-up in those material stocks, but nothing goes up forever.
Nothing goes up forever. And remember that the TSX is a very concentrated index with respect to materials, energy, and financials. So when you have 3 of those big sectors outperforming, it almost always outperforms the S&P 500, and that certainly was the case this year. We're a bit concerned. We went bullish gold in our work in the fourth quarter of 2022, and so we are becoming a little bit more squeamish, let's say, on gold. We're not saying sell all your gold, but you don't want to buy gold after it's been up so high. Now, we would say from an asset allocation basis, in terms of your equity positions especially, you want to be a little bit more balanced with respect to what you're owning in Canada, especially with respect to more more tech stocks, more consumer discretionary stocks, and certainly more financials in Canada.
Do you think there's a risk of an AI sell-off, a nasty one?
There's always a risk of stocks going down. There always is. And you have to protect yourself by being in other types of strategies, including value, including dividend growth. And I think that makes a lot of sense. One of the things that we really fight against in our career is that bubble is an overused term. Just because stocks go up or a price goes up doesn't mean it's a bubble. It's a bubble when we see frivolous things happen, when everybody's making money. And to us, we've not seen that frivolity, if that's a word, with respect to a bunch of IPO activity, in initial public offerings, secondary offerings, a lot of crazy mergers. Remember in the 99-2000 market, we had these crazy mergers with companies, stocks were buying stocks with stock. Oh, by the way, that stock value had no value because it just was going up. There was no fundamental value to that. So we don't think we're there yet. But clearly, we've seen a spike, and with this valuation intensity increasing, you've talked about it before we came on, and everybody's talking about it. We're going to see a little bit of a pullback here, but that does not mean the bull market in AI is done. We, in fact, think we're in the third or fourth inning of that. But fundamentally, we're starting to see fundamental dispersion, Andrew, where different companies are beginning to lead and take the forefront, and it's showing up in valuation and it's showing up in earnings growth.
You have a couple of ideas for us. One is contrarian, Lululemon. It's suffered this year, stock down about 50% or more. You see a potential for a turnaround?
What we like to do is buy these great brand companies that maybe have tripped on themselves a little bit operationally, and we think that's Lulu. And Lulu's a great brand. Obviously, we've seen other momentum trades this year in that type of apparel, whether or not it's Viore or Alo. They're going to come back to Lulu. At the end of the day, they're going to come back to Lulu. And we're starting to see some operational improvements there. And Lulu, a great Canadian company listed in the United States, of course. But we think that brand is here to stay.
Yeah, it's a global name, isn't it? I was just in Ireland and I saw people swanning around in Lululemon clothes. And Aritzia, you see promise there.
We love Aritzia. We think it's one of the actually most under-owned stocks in Canada with respect to private wealth. Institutions have been there for a while. We think Aritzia is an amazing brand, amazing product. From an inventory standpoint, they really manage it well. They've been very smart in terms of adding capacity into the United States. They're not everywhere. They've added that scarcity proposal to them a little bit. And I think it is a great company that I think from a consumer perspective, if people were worried about Canada heading into a recession, look at the chart of Aritzia this past year.
Brian, thank you very much indeed.
Thank you so much.
All the very best in the new venture.
Thank you.
Brian Belski, CEO and Chief Investment Officer at Humilis Investment Strategies.